I won't go back. Not a lot to add on the index except upside bias, possibly sideways to upside bias. Looking at the oil, we had this small leg. This is a daily chart, so we had this small leg down and wave up and another down, so that could have possibly completed this ABC flat correction, in which case along with the equity index we should see oil prices heading higher as well. We were expecting a bit more deeper retracement, but that hasn't happened. But nevertheless we still got ABC down, and the current today's price, for example, is quite noticeably higher, so maybe that would then just continue to push higher. So equity and oil seem to agree to some extent with the upside bias for at least few more days to complete their respective final leg up of this current cycle, and then we should expect some degree of retracement. So continuing with that, the dollar index, in which case should be retracing its recent move up, and as you know, we are at the moment trying to follow this, broadly speaking, this chart pattern. And there are wild claims by various commentators that either dollar will get really bullish and go all the way up there to take out this previous high. And in theory one could not rule out any of these likelihood scenarios. However, we've been trying to follow this guide here, and this is the guide where we expect a sideways, like a flat correction after such a strong leg to the downside. So that's our guiding I wouldn't say principle, but that's our basis of being guided by the Elliott wave definition of what this flat correction is. So in a flat correction you get A, B and C to the upside, so that follows this aspect here up to here. Then we have A, B and C to the downside, so that goes A, B and C to the downside. So from this low we are now in this final leg up. Okay, now just to also point out that from this top to this bottom we also have a flat wave. So instead of a normal A, B and C zigzag, we got a flat wave. Now in a flat wave you got wave A, B and C in a bracket A, then you got A, B and C bracket B, and then you can see on the downward bracket C you got 5 waves. So that's a principle, that if you get a flat correction where you have A, B and C zigzag in a wave A, B and C zigzag in a wave B, then you expect 5 wave move to the upside. So that normally holds, and because that holds, at some stage somewhere this 5 wave move to the upside will finish. In theory there is nothing to stop this 5 wave move going up to retest this high, or maybe even head a little bit higher, but nevertheless that's the last move up. In other words, this is not going to continue retracement and continue up and then basically take out this high. That's not what we are expecting. We are in a flat correction, so this last leg up is a 5 wave move up. So let's look at that in a little bit more detail. So this is a 4-hour chart, and so far you could see quite clearly that we had a wave 1 up, wave 2 down, then we had a wave 3, and wave 3's got a 5 wave, 1, 2, 3, 4 and 5. So that's a wave 3. We came down in wave 4, and we've now just completed a wave 5, I think. And if you look at an hourly chart you'll see 5 a bit more clearly. Okay, so starting from here you got a wave 5. So in a wave 5 you got a minor 1, minor 2, minor 3, minor 4, and this minor 5 is apparently like a rising wedge. So go 1, 2, 3, 4 and very small 5. So if that is correct and this holds, then my feeling is that the dollar has actually now topped. The only thing that could change in this is that this 5 waves actually makes a wave 1. So if that happened, then what we would expect is we've got 1, 2, 3, 4 and 5 to become 1. Then of course we could expect a retracement, you know, usual 38% or 50% retracement. Then we would expect another leg up, wave 3, and then we'd expect a small retracement for wave 4 and a final leg up for wave 5. So we would expect that. Now if that happened, then let us make an assumption. So if that happened, then at the moment we've topped, so that one could be a larger wave 1. We'd expect a retracement of this larger wave 1, probably back to this area where previously there was a resistance, could become potential support. So we could expect now the dollar index dropped to about 80.1 area, then make another leg higher and then come down. So if we were simply to make a wild guess of where that might happen, and we really don't know, but we could have a situation where we've got 5 wave and we finish off with what we call AB equals CD, assuming that the wave 2 retraces to this level. Then we are looking for possibly 8180, say, so if you round it up, call it 82 area. Okay. Also what I've done is this part of the wave here, projected from there. You see we have a possibility of 127% extension or 141% extension coming into that area. Okay, so this is only trying to jump the gun, but this I think is really asking for a lot personally, but that could be likelihood. And if that happened, then of course everything against the dollar would weaken. So then the equity market, for example, would have a fairly sharp correction, relatively speaking, almost now. However, the scenario that I am currently more likely to feel reasonable is that we've got the 5 wave up, and those 5 waves almost comes back to this previous high here. So I think in general dimension and general configuration of this 5 wave, I think is over. If you look at the RSI on the daily, then we don't have a divergence like some of the others. We never really got a clear divergence. You can see over here we never got a clear divergence, and yet we had a pullback. So it may be that we won't get a clear divergence that we normally expect. But if you look at it in a 4 hour, we do have that divergence. Okay, we have, since the high that was made here, we came down and we went back up, but you know, RSI never really managed to take out the previous high, and yet on the price we had a higher high. So I think on a 4 hour we do have a divergence we require. We do have complete 5 waves, and they are acceptable in terms of general dimension and where they've got to with regard to the previous high. So only thing that now we need confirmation that that is actually now complete is when you look at an hourly chart. At the moment, you see we don't have a lot to go by. See this here, and it may be that it is very early stage and it hasn't really moved a great deal. Maybe that's the reason why. But at the moment you can see that we've got possibly wave 1 down on this hourly chart, this wave 1 down, and then we've got maybe like a exactly where would wave finish. Okay, so if you look at it in 30 minutes, you can see that wave 1 down, and then afterward we got A, B and C. Okay, so wave A, wave B and wave C, and the wave C looks a little bit like an ending diagonal. So that would also be reasonable to expect. So we would expect wave A up, wave B down, and wave C to finish up with a rising wedge kind of formation. So we've fallen out. So if that's the case, then I could say maybe this one on the way down now, this one is possibly a very small wave 1, and in which case this one is a very small wave 2. So then we are looking to make a progress to the downside, and the count here is not very clear, but maybe this is 1, this is 2, probably just about completing 3, right? That's 1, 2, 3, 4 and 5. So really speaking, we need a small drive down, and remember this is on 30-minute chart now. So small drive down, okay, small drive down, and then we expect this one to go back up. So that would complete like wave 1 down, 2 up, 3 down, 4 up, and then 5 down. So that would complete a one complete cycle. But that cycle is only this one here. So 1, 2, 3, 4 and 5, only this one here. So overall we got 1 and 2, this would be 3, then we get another retracement and another leg down, so that would then complete approximately 5 wave down. So once that finish, exactly where they would be, I'm just sketching them, but you know they could be a bit lower down, but then we would expect another A, another B, another C, okay, and then we would start on the major wave, because this cycle here so far would complete wave 1, wave 2, and then this wave 3. So until we complete this piece here, it would almost appear uncertain, and during that time basically what would happen is the market would just trade sideways. It would appear staircasing down, but broadly speaking just moving sideways, and that would be reflected in most of the other asset classes, whether we look at equity or oil. If however we actually start making serious leg movement to the downside, then maybe we've got 1 and 2, and then this wave 3 becomes quite extended, so we can actually start seeing it move very strongly to the downside. Now the reason why I'm explaining this is because depending on what goes on, either we'll get a very clear clarity in the next day or so and the wave really start making impulse leg to the downside, which is what we're expecting. But if not, and we continue to see this kind of a movement, small gradual staircasing down, but broadly speaking moving sideways until we finish this complete 5 wave cycle. We've done a wave 2 and then we done a wave 3. That's when we will get clarity. So during that time we should not jump to the gun, we should not preempt a possible conclusion, but you know, remain cautiously guarded about our understanding of the dollar index so far, and then in contrast other dollar US dollar pairs. But I think we do have a top, and unless we see something different, we wouldn't know. If we did not get this, then what we would get is we'd get ABC movement down. So here we've started off, even then we'll get this 5 wave down to complete A, ABC back up to complete B, another leg down, or 5 waves to complete wave C. So even that would still keep us in a little bit of a suspense. Nevertheless, we expect in that case ABC retracement to possibly come into this sort of area. So if you get this strong move down and we take that out, then possibly this up leg is finished. Okay, so it's pivotal really. I'd like to feel that we've put a top in, but we need a clarity, and until we get a clarity, we will probably not find other pairs also lining up so well. So just keep that in mind. But nevertheless, I think that we will see a top in that area or a little bit higher in any particular manner. If we actually get a pullback and we make another leg higher and we get another 5 wave, including this one being the wave 1, another 5 wave, then I think what will happen is wave 1 was long and we'll get a smaller wave 3 and even smaller wave 5, and we might actually finish up with a ending diagonal or like a rising wedge on a larger shape. So let's see what happens. So we know what we're expecting. So with that in mind, let us go over some of the other pairs we were going to look at, and we'll start off with the euro pairs we were looking at. And I won't go into great depth with some of them, but euro pound, for example, we've been noticing now that since the high we have this three-way move down. So it's A, B and C move down, and then on the way up, this one, remember yesterday we were saying that this looks like A, B and C possibly. So well, that might become A, B and C as a larger wave A. We had a small retracement, wave B, and we've done a wave C. So really this is mature now. A, B and C is mature. It's not what you would call an impulsive leg up. Impulsive meaning, see this down wave here, this wave down, relatively speaking were impulsive. So in that respect, this one is hardly impulsive, and you can't call in any way, you can't divide this into 1, 2, 3, 4 and 5, for example. That's not really likely or possible either. So I think I am inclined still to continue insisting until we know differently that this is a wave A. I'm calling it alternative, but it's really a wave A. This ABC up is a wave B. Okay, so now what we're expecting is a 5-wave decline to the downside. Okay, and when you're looking at some of these live charts, it's very difficult sometimes to actually get your handle on days ahead, because you're trying to anticipate something, and often when the market doesn't trend too well, it becomes even harder to actually pinpoint where your things are. The only other scenario that we could expect from this is this possibility here. Okay, so that is only other possibility, is that we've had an ABC retracement already down. So that was the wave 3, in which case this retracement down is a wave 4. Okay, so that's why I'm putting this pink in alternative. So this would be wave 4, and I would say so this here could be wave 4, and then this one could actually form a wave 5. So that's another possibility we need to keep in mind, that if we don't get a strong 5-wave move down, then what's happened is we've already had an ABC zigzag, and then this is an ending pattern. Now in the ending pattern you do get 3, 3, 3. So what I mean to say is that you get ABC 3-wave up, ABC back down, 3-wave down, ABC up, 3-wave up, ABC back down 4, and ABC back up. So that's the only thing we could expect, is that we'll get a final part of this cycle as a wave 5, ending up like an ending diagonal or rising wedge pattern. And if that's the case, then a possible alternative in the pink probably will not materialize. Then we'll get a wave 5, and afterward we will actually get a deeper retracement, because we're not only expecting to retrace this, but we're expecting a much bigger retracement, i.e. we are going to, this is the wave 5. So we've had like a wave wave 1, wave 2, and this wave 5 will complete this wave 3 in double parenthesis. So we would make a retracement of all that, probably almost coming back to this sort of level, 84, or maybe a bit lower down, probably like 83.60. So that's how I see euro pound shaping up. If the pound really start getting relatively strong, and again I think it may be too soon to say that, maybe rest of the week it may not. I think there are a lot of negative sentiments, but those negative sentiments I don't think change the structure overall of what we've analyzed on the pound, but it might mean the actual bottom will be a little bit lower than where we originally anticipated. So if we don't get that, and the pound begins to remain relatively weak, then maybe this is the scenario we'll get, is that we get A, B, C, D, E in that kind of way. Then we'll expect a pullback. Okay, so two possibilities in euro. If you look at the euro CAD, then euro CAD, you can see just about that is actually done ABC move to the downside, broken through this brown trend line. Okay, and then what we have, come on, like what we have is, if that was wave 1 in parenthesis, and you know previously we've had number 1 in a parenthesis, number 2 in parenthesis, and we're doing Roman numerals now. So in Roman numerals we have 5 wave up, so wave 1 in parenthesis, wave 2 in parenthesis, A, B and C. Then this one so far looks like a leading diagonal. You see what I mean? Leading diagonal. So in the leading diagonal, that would be small wave 1. Small wave 1 on 4-hour chart. And then when that finishes, we'll see a small retracement and then continue higher. So if you were looking to trade Euro CAD, and if you're still looking to go long, then watch out for this small rising wedge, and watch out for that one to retrace, and then you can enter along with a stop just below here. When it retraces, at least you expect 50% retracement, so probably something like 134.40 area, you know, or a little bit deeper, and your stop will be then there. So on the 4-hour chart, your stop will still probably be about 100 plus points, but then we are expecting a fairly strong move to the upside, because we will have finished this wave 1 in parenthesis, wave 2 in parenthesis, so next move up should be quite strong. So you know, initially 100 to 120 pip stop is not completely out of order for something like this. Okay, if you look at the RSI, you see the RSI is approaching back toward 70 area after having, you know, come down and fallen and it's going back up, reach the 70 area. So even if you get a small pullback, that might only come to 50 and then continue pushing higher on a 4-hour chart. So I am looking for possible long trade. If you're looking to, you know, if any of, well, let me rephrase it, if any of you want to trade Euro CAD, then possible long trade could be in this area after this rising wedge is finished and we get a retracement we're like expecting is ABC down, so we should be getting there. And then basically what you'll begin to see now is that we've had this strong leg up, and you can see almost what is beginning to look like, almost looking like a cup. So if we get the retracement, we go up here, then we'll form a cup, we get small retracement again, and then we start moving up. So I think, you know, it will be a nice technical confirmation pattern, and then horizontally you can see we came down, we you know, previously on the left hand side we see resistance, so that should become support. So we didn't quite actually bump onto the support, but we saddled it on both sides, and now we have started to move up. But we've had other areas of support like this minor trend line going up and the Fibonacci retracement and so forth. So I think everything is in order. And if this is early sign of a first leg up, then we get ABC retracement, and that would be the low risk to enter with a stop below the structure here. Okay, that's a Euro CAD. You look at Euro Swissy, we will ignore. Euro Yen, the Euro Yen and most Yen pairs are in a little bit of confusion, I think. Well, the pairs themselves are not, maybe we are. I was expecting a bit more deeper retracement on most Yen pairs, but this one you can see has just gone sideways, and it's almost beginning to look like the Euro CAD we just looked at. You see what I mean? Is it got A, B and C finished, and maybe we are already beginning to make a new leg to the upside. Either that or this is going to be a flat. So we got A, B, C, leg A, then we got ABC, little difficult to tell, but see, we had this one here as ABC down as the wave A, then we got this one looks like a 1 2 3 4 and 5 wave up, so it's ABC down A. This one could be X, and it's done another ABC. Okay, so wave X, so ABC to give us wave A or a W, wave X, and then ABC down to give us wave Y, in which case this is probably part of a new leg to the upside. So in a new leg to the upside, we've already done wave A down, this one probably wave B, and a small leg down will probably complete that. And then we should, if the euro begins to run up, then this one will start running up. So what will confirm that that is likely to be the case, if we connect this trend line up, connecting these highs, and if the price actually goes above, then we know that most likely the correction is over, and this is probably part of the first leg up of the next cycle. So wave 1 up, wave 2 down, and then we'll be looking for wave 3, and that too will form that little cup and handle kind of a pattern, with a view that we will be making a new high on euro yen, and probably in that case some of the other yen pairs will follow in a similar manner. So we haven't had the pullback we were looking for. If it makes it up there, then the minimum target we're looking for is possibly the height of this congestion here. So if I make that one thicker, like so, we'll be looking for euro yen to go up to something like 131, 132 area. Longer term, see, we'll be running into this what was previously congested area there, and we will have gone above the upper parallel of the rising pitchfork, and also at the moment we are in a area where previously what was the resistance has now actually turned into a support, and we've supported quite well. So this one I'm saying is the minimum, but we could actually go much higher. So the euro yen looks similar to the euro CAD, in which we are getting this rounding kind of a pattern. If this is the end of retracement, then we will get that. Okay, so euro could actually adopt another strong leg to the upside from CAD and from yen perspective. Euro New Zealand put a bottom in, done a wave 1, and then all of this here, I really don't know how you would label it. I think what I could do, if I was to make some adjustment on these, is this one down here is wave A, B, C back there. It looks strange, but wave A, then you go, so it's still like an expanded flat, is wave A, wave B, and then A, B, C down here is a wave C. So let me just see if I can make that change and then come up with something that is a bit more harmonious. So wave A, so this is what we might look like, wave C. So this wave 2 comes in here. Okay, so what we got is wave A in double parenthesis, A, B and C, O, wave A, then we get A there, B here and C there. Okay, that might look more reasonable. So what we got here is we had a strong wave up, we call that 1 in double parenthesis, then we had A in bracket, A, B, C, so it's wave B in bracket, and then wave C down to complete this zigzag. So this zigzag actually finishes here. It's a flat. So then we had a strong wave up. So that could be wave 1. Then we've got a series of A, B and C flat again. So we had a flat here and we got flat again. So maybe that would be wave 1 in bracket. Then this one is actually, oh, I didn't help myself. Okay, so we've got wave 1 there, then we've got A, B, C back up as a wave B, and then C down here. So wave A, wave B, and then wave C here. So that becomes wave 2 in parentheses, and that wave 2 in parentheses should be finishing because we've got possibly this wave A, wave B and wave C. In wave C we've got 1, 2, 3, 4, so we need a one more completion downward thrust that would complete the expanded flat 2. So we've got wave 1, so we've got wave 1 in double parentheses, wave 2 in double parentheses, wave 1 in single parentheses, wave 2 in double parentheses, and now we should really be moving in a very strong leg up. Might take time to build the momentum for the wave minor 1, minor 2, etc., but we should really start gathering momentum to the upside on Euro New Zealand. Now if that happened, that means the New Zealand dollar, which recently has been fairly strong, managed to keep Euro in check by just moving sideways. Okay, so if this is suggesting we are going to move to the upside very strongly, then that means New Zealand dollar is actually weakening or has already topped. And I explained that to you yesterday, but I'll go over it again over the next few days, because that's another big picture. We're looking at a pound possibly putting a big bottom in and then rallying from here. Likewise, I think the New Zealand dollar and Aussie dollar have put in intermediate top, if not a significant top. Okay, so we should really see New Zealand dollar weakening and this one beginning to gather momentum to the upside. So if you're looking to trade Euro New Zealand, then on this next thrust down we will have finished 5 wave completion, so we could come back into the area of like 156. If you get 156, then look to enter long at 156, and your stop will have to be below series of these lows here. So initially I'd say 200 pip down initially, but that's a catastrophic stop loss, but 200 pip down. And then see, we have this trend line, so I'm hoping my trend line will hold. So I'm not really expecting that 200 pip stop to be actually challenged, but we should be looking to enter somewhere around 156 or a little bit lower if we can manage, if it comes down a little bit lower. But if not, then there, and a stop initially 200 pip down below these lows, and then as soon as you begin to move up and you get about 100 or so pip in your favor, you bring this one straight to break even with 10 or so pip locked in, so it covers your cost. So there's no more loss afterward, because once it moves about 100 or so pip up, we're not then expecting it to come back and take us out. Okay, so we could do that, and that should be looking to go up. So then it looks like the euro will start really ramping up, I think, because New Zealand, Aussie CAD, sorry, Euro CAD, Euro New Zealand and Euro Yen all seems like they're probably looking to make up a new leg to the upside. Euro Aussie likewise, it hasn't come down as deeply as we wanted. Remember previously we were looking at that as a potential triangle. It didn't form, so we were having another leg down, and that another leg hasn't come as far as we expected. But nevertheless, if I look at 4-hour chart here, we may still get that, because the Euro New Zealand needs a leg down. So Euro Aussie probably could still give us the leg down, and what we would have is this wave A, wave B, and then we are looking for wave C. And because it's not a flat, we don't need what we were talking about before of 535 sort of thing. So this is wave A, this could be wave B, and then we've got coming down, we've got A, B and C, and in that we've got 1, 2, 3, 4 and possibly coming down. So I think we might not get all the way to here, but we might retest the low. So in the euro, if you're looking to get long, then I think if we get any drive down, would be the opportunity to enter long. And we could get a retest of this here, or it might come down even further, 28. So from 128 to 128.50 area is approximately where we could get long, providing this congestion still has one more drive. And I think when the Euro New Zealand does that, it may be that the Euro Aussie will probably do the same, come down to complete this overall correction and then begin to move higher. And when it begins to move higher, we will have done wave 1, wave 2, and we've done wave 1 and wave 2 of the next cycle. So we'll then start off with the wave 3, and within that wave 3 we'll be doing the first wave, second wave, and then going up. So it will take a little while, and we will form maybe this kind of pattern again over here. So we'll have fantastic structure really developing, and then it should start picking up the momentum, and then I think we've got a clear run up to about here. Once we begin to build that momentum and runs, we're looking for clear run to about 140 before any significant retracement might take place. So they're all very similar, except that New Zealand dollar is probably relatively stronger compared with the Aussie so far. Whether that is likely to change going forward, it will be difficult to tell. My perception is that the New Zealand dollar will remain stronger and Aussie will continue to weaken. Okay, so those are the euro pairs. And let me go into the into this to show you the weakness of the Aussie New Zealand. See, this is Aussie New Zealand chart I showed you yesterday. Broadly speaking, we have been going up in a rising trend channel for quite some time. From the low here, we had some wild swings, but broadly we stayed within that trend, with the exception of a couple of these spikes down. That now here appears to be completely broken down. From here we had a strong leg down. That was a very strong 5-wave move down, so we call that wave A in parentheses possibly. Then we had ABC back up as a wave B in parentheses, right? And we have now started making lower low and lower highs again. Whether you count that from here, or whether you say that this was A, this was B, and this was C, and started off from there, regardless of that, see, this area is approximately the horizontal potential area. We got a lot of spikes, so we can't go for an exact, but I think the most of the body of candles can be picked up by this area here. So if I was to put a horizontal line in there around here, is approximately where I would say, and if I was to draw a little zone, then my zone would be around here. So we are currently coming into that, so maybe we might bounce a little bit, and then most likely will continue, because we've fallen out of this rising trend channel and we've got a new trend channel developing. So with that in mind, I think what we might do is, we might bounce a little bit, but then ultimately continue down. So Aussie dollar will remain weaker and New Zealand dollar will remain relatively strong. So from that perspective, you can decide which one you want to pair up with the others, but we won't be able to get an exact pair match. So You know, you might do something like if you're doing Euro Aussie on one, then you might do something like pound CAD or pound New Zealand on the other. Okay, so they will still be correlated somewhat, but not directly, because euro and pound don't have an exact correlation. Well, not exact, but it doesn't have very high degree of correlation. It does have some, but not very high degree. So in that respect, you can probably try and find a different pair. So Aussie dollar will remain weak. Shorter term, it might strengthen against the New Zealand dollar because it's currently in the process of bouncing, but then will revert back to that normal size. Okay, so what I was going to also just go over is, yesterday we were looking for, you know now longer term we've come up with this is New Zealand US New Zealand dollar. So we've gone up in wave A, wave B and wave C, and I think quite possibly that might have actually formed a complete zigzag, and I'm putting that zigzag as a wave A in parenthesis, and we have two possible choices. One of them would be is that this pair now, having put a bottom here, and whatever that bottom was, because there's a significant wave coming down is a bottom, so maybe this might have been wave 3, this might be wave 4 with a new leg coming down, wave 5 eventually, not right away, eventually. So we have a two possibility, is that having topped, we could actually make that wave straight down over few years, cascade, continue down in a new 5-wave movement to the downside. Okay, that would be one possibility, but that would be more in tune if the dollar had bottomed, finally made a generational bottom, and then it started going up in multi-year move to the upside. But because the dollar index is not doing that, I'm not expecting New Zealand dollar actually to move down that far, that significantly now. I think that probably will be stored up for a little bit later. So in order for allowing for that, what I'm thinking is we've got ABC up to give us a wave A, so we should now do ABC to come back for wave B. Okay, so this is what I'm thinking of we might actually get. So if you look at it on this sort of a scenario, you see that we made a top, we've come down wave A, then we got A, B and C retracing back that one, so that was a flat. So flat had ABC in A, ABC in B, so we should see 5-wave move to the downside. It should be fairly strong 5-wave move to the downside, and in which case we would come at least to something like this, which is the 50% retracement of the entire rise, something about 64, 65 area somewhat. And once we finish that, then we'll do another ABC to the upside, but not as strong as this one, ABC to the upside, and eventually we'll actually come back and either make a double top, or we might make another higher high. Okay, so we might then say, for example, after having done ABC up, we might then go back up, you know, in this kind of fashion, eventually to top out and come down. Okay, but again, I'm running too far ahead. I don't know exactly how it's going to happen, but I think this current leg is definitely being called for, and it's being called for because if this is a flat correction, this area is doing nothing more than correcting this last leg up. See, when this one went up there, this leg came down to correct that. This went up to correct this leg. This coming down to correct this one. Going back up. So this ABC is actually correcting this leg down here. So now that is finished, we need to continue with the correction. So this was the first leg down. So this is the second leg down. And we had the idea of ABC, ABC. So 3-wave in one, in wave A, 3-wave in wave B. So we should have 5-wave down. So that understanding means we should be looking to come down. And an absolute minimum 5-wave down is probably to this area here, 71, 50, 72 area minimum, and that would just keep the whole thing flat, and then we would probably just do one more sequence of higher high and higher low to make the Australian New Zealand dollar top out. Other than that, I think it looks more fitting if it actually did this, at least to come up to here, 71. So we got two possibilities. Initial expectation for it to come back to this area here at 71.50 to 72, or possibly a full 5 wave down to here. If they're a little bit longer waves, will probably come down to about 63. Okay, so if you want to trade this one to the short side, you can see we've already had a short. I don't know what's happened with this spike down on an hourly chart. Something must be happening on the New Zealand side, but we had this 5 wave down here. You see we've got 1, 2, 3, 4 and 5. So we've had this one here is a 5 wave move to the downside. Then we've got expanded flat. So in expanded flat we got wave A, wave B and wave C. Okay, so if that is a wave A, wave B and wave C, then possibly this one is a wave 1, and in which case this one is a wave 2. So we were saying we could short that. Yesterday I suggested that we could get 50% retracement or 61.8% retracement. We could potentially short that. So we had a 61.8% retracement. So really speaking, if you did manage to short that one, there was a good chance of shorting it. If you drop down to like an hourly chart, you can see we had an up candle, then we had a couple of hesitancy, and eventually an inverted hammer. So on the break of that, so anywhere from about 84.70 to maybe say 84.50, 60 area, you could have gone short. And then I don't know what's happened here. You can see it's a pin bar pointing the other way. So whether that is a kind of a false data or what, I couldn't tell you. You'll have to check on the other chart. But potentially short has been triggered with a stop now just above the top here. Okay, so in some way this is now pointing down, and if you haven't entered, then it's still possible to enter, because we've come back into this area. I don't know what this spike is. We need to confirm that first of all, but we've come back into the area. So really speaking, it might be like we've done 1, 2 and 3, or 1, 2, 1, 2 kind of a thing. I don't know what to make of that. It may be that we've got 1, 2, 1, 2. Sometimes when you get a big thing like this one, it actually encompasses the whole wave in there. So we may be like 1, 2, 3, 4 and 5 all done, and we've retraced. But then the important thing is, see, we've now started coming back down. Okay, so if you really wanted to short this one, it's possible to short that sort of thing now. Time being, put your stop above, which is it's probably about 30-40 pip above. Okay, which is acceptable, and we're already beginning to move down. After this, I don't expect it to go all the way back up. Other than that, you'll need to wait for a bit more clarification, and certainly we'll need to check what's happened over here. Okay, but other than that, it's really short. If you didn't want to short this one, and I suggest you don't, because if New Zealand dollar is weak, then you can rather than pair it with New Zealand dollar against US dollar, is you can actually pair New Zealand dollar with another currency, like potentially like a pound or even Canada, like New Zealand CAD. But failing that, if you wanted to trade that, it's also possible to trade that one to the short side. So that's a New Zealand dollar. I think it has already topped, and we're looking for significant pullback. We'll go over the Canadian dollar. Canadian dollar is coming into the area where we would look to short, or consider shorting. It's come back to the upper parallel line, so that's back into the area potentially where we should expect a resistance. we have also retrace of this leg 61.8%, so that's another factor. If you look at the RSI, then RSI is potentially giving us a divergence, not a great one, but nevertheless is divergence there, potential, not confirmed. So if we now find Canadian dollar begin to strengthen against the US dollar, then we'll start seeing this chart coming down. Okay, so far everything seems to be looking good on that front, and is potentially in a shorting zone. Just take 50% off. Okay, so 61.8% potentially shorting, and at the moment on a daily chart, you can see yesterday's chart was a pin bar. Yesterday's candle was a pin bar, so potentially if you get that candle taken out from the low side, then you can put a stop just above a 50 pip stop, or you could, you know, drop it down to like a 1 hour or a 4 hour chart, and what you do is you see the first one coming down. If I'm not mistaken, so far it's too early to sell because they only got few 1 hour bars in there, but we might be getting something like this, something like you know, like that, like a falling wedge. So that would be like a leading diagonal. Okay, but technically if you get shorting in that area, then the stop just above is acceptable, but you might need a confirmation after having seen Canadian dollar become so weak recently. But you can see here, look, on 15 minutes you got wave 1 down, this possibly is wave 2, and we are now working on a wave 3. If it's not, then we might get one more push up and then it's ready to short. Okay, so in which case you don't want to short it right now. So I would say that if you actually get this pivot taken out here, which is like a just above fraction above parity, so if it takes out the parity, then you can enter short. So stop sell order near the parity with a stop above the high here, then you'll finish up with like 50 or so pips. Okay, I was going to also show you something else. You see, I'm looking to say short Canadian dollar, but sometimes, you know, you get in there a little bit too early. See, this wave 1, wave 2, wave 3, I think what we might get, this is wave 1, this is wave 2, so we had a wave A, wave B, and we're looking for wave C. So we got wave 1, wave 2, wave 3. So I know what we might get. We'll get something like this, a leg down, then leg up. Okay, that's what we'll get. So if you then draw a trend line here, you'll have that kind of trend line, and then if you look at it on the top, we haven't got the parallel line, so I think what we're gonna get is that, like a rising wedge to top up, finish off. So I'm expecting Canadian dollar to drop down to the bottom here of rising trend, and then one more leg up. So if you, for example, were looking to go long, then you might get a chance to go long a little bit higher up. %61%, so we're talking about not too far up, but just, you know, in that vicinity. So it may be like a 1.01 to 1.012, okay, approximately in that area, and we'll get a divergence on the RSI on daily chart. And then in order to get long, you would use like a normal entry. Now just over a week ago I was expecting this, and I estimated what the option prices would be, and what I did is I have put on my demo account come on, okay, on the demo account what I've done is put a limit buy entry for a put option, and this CDD is the Canadian dollar. So I put in two orders. One order was for 15 cents, so that one is filled today, okay, and because the Canadian dollar has come down, this one is showing a little bit of profit. Bought it at 15, is currently mid market price about 17, so not a lot, but you know, because I'm expecting this one to develop over June. Now it looks like I've entered in too early based on the wave we just looked at. We need a final leg up, finishing the retracement before continuing down. So this one is filled today at that level. The other one I have still open is at 12 cents. So I'm taking one batch at 15 cents and the other batch at 12 cents. Okay, so I may even go back, and if I see the Canadian dollar is going to go up, I may even go back and edit this one. So instead of 12 cents, I'll put it to like 10 cents. So between the two, I will have put $150 and another $100 approximately. So I may finish up with about $250 at risk in total. Okay, $250 in risk in total. But I'm looking for this one for a movement up till June. So what I will get on the chart is by June, for example, I don't know how far it's going to come, but we are talking about at least March, April and May, and part of June is about 3 months. So in 3 months, so this leg when it came down on a daily chart, it took just about 3 months. So I don't know whether we'll get a strong leg like that, but because this is a retracement, so we'll be at least getting a leg B, no, this, if this is wave A, all of this is the B, and then we'll get another leg C. So I at least expect equivalent. Okay, so in that equivalent we might get similar sort of movement. This one here is just over 3 months, and again it did something similar. So I'm expecting that kind of movement to the downside, and in which case we would be looking for overall about 800 pips from there to here. So we'll be looking about 93 somewhere. We could get to about 93, but even if it doesn't come all the way there, you only come to about 90, 95 somewhere. These particular options will be quite valuable by then. So reason I'm showing this is sometimes you might find that longer term, because you never know exactly where the wave is going to finish, and you preempty things, in which case, you know, you jump in too early, and either in a normal circumstance you'll have a 100 pip stop or 200 pip stop and you'll be taken out, or you'll get an adverse drawdown on your account size, or you'll wait for confirmation, by which time 200-300 pips have already gone. So there's no ideal situation at all, but I think this option is a great way of doing it without putting a huge amount of money in there. So if I was to just show you what this would be worth, and this is theoretical calculation, by the way, the reality will be quite different. But if you just wanted to see, if this one drops to about 95, you were saying 94, if it drops to about 94, then the option I bought will be worth nearly $2.80. If it drops to 96, even 96, then it will be worth about $2. Right? So in other words, what I bought for 15 cents will be worth $2. So if I put in like $150, this one goes up to $2. That would be like a what would the math say? 15, 5, 7, 8 times. 7, 8 times. So in fact, this what I've got here will probably be over $1,000. $150 will be touching $1,000, and it might take 2-3 months, but that's fine because I'm not risking a great deal. Even if I now find that the Canadian dollar drops a little bit and I think, okay, I'm in there in the right place, and then it retraces back up and it goes up to the higher level that we are expecting, then I will make a loss on this one. But remember, this one is up till June, so for another 2-3 weeks, if the Canadian dollar goes against me, I don't have a lot of money at risk. But once you start going the way that I'm expecting, then that's what is likely to happen. And because I haven't put a lot of money in, now that I know it's going to go higher, this one here I've got at 12 cents. I could go in now and say modify that one, and I'll actually reduce it because I know it's going to get filled when the Canadian dollar goes up. I'm going to put that at 10 cents. So that will just lie there for 2-3 weeks whenever it gets there. So I filled that one at 15 cents today. So if the Canadian dollar goes higher over the next couple of weeks, then it'll probably get filled at 10. If it didn't, then I might have to come back and adjust it to enter. But those kind of things I'm looking for, and I've tried to show you how you might be able to. And then you see, for that you don't have to worry about stop loss. You don't have to worry about adverse drawdown, margin call, or anything like that. And the other thing is that if you get something like this one loaded up, then say if I get another one here, I've got this one here is a 1,000 shares. Okay, so 1,000 times 15 comes to $150. So the other one, if I get filled, I'll get it filled for 100, or say another 150. So I'll have totally $300 at risk. Okay, so what I could do then, once it's filled and things begin to go in my favor, I say that, look, if this one, say for example, instead of 15 cents, if this one gets to like 50 cents, three times the value, I can take half of it off. So I've taken all my money out, and I've taken a little bit profit out, and then the second position is basically free now. So I can run that. I've got no worries about stop loss, right? So these kind of things you can do, which you can't do with a normal FX trading. So I'm not dismissing it. I'm not saying it's no good, because it's obviously, if we do it well, we could make good money on this. But equally, I'm mindful of the fact, and even myself considered, is that most of us have a relatively small account, and we don't want to really risk too much money if we do wrong. And sometimes what happens is you have a stop and he stops you out and then he goes. And sometimes when that happens, sometimes it's difficult to re-enter the trade because you've just taken a hit, and you begin to think whether you should. Then you start looking for confirmation, and by then the thing is gone, and you don't really want to chase it because you'll be then entering in wrong or most unadvantageous position. And sometimes you miss because of that, or you suffer loss and also miss the move, which is like a double whammy blow. But with this sort of a thing, it's quite possible, because it is like $150. It's almost like keeping that kind of pips away. In terms of the actual position size, it will not be equivalent to your usual one lot or a mini lot position, because it works on a different principle. Here you are taking a value of certain currency, whereas the other one is based on an equity traded fund or an ETF. So and what you're doing is buying a share in the ETF. So it mimics the same, but you have to work out, if you want exact exposure, then you have to work out how much money you have to put in to get that exposure on here, and then try and work out how many shares you should go for the other one. But nevertheless, if you simply do what I've just done now, you don't worry about lot and mini lot kind of position. All you do is your total account size, and you say how much risk am I prepared to take on it, and we work on the general principle of 1 or 2% maximum risk on that particular position, no more. Okay, so that's what I was going to show you on there. So Canada's got a bit more further upside. Euro here, depending on what the dollar index does. If the dollar index start making straight down leg, then the euro will start going straight up. Somehow I don't think that's going to happen. So what I'm expecting for euro to do is, even if this correction is over, it will probably go up like wave 1 in a minor 5 wave up, then come down and retrace before start going up. Or we might be in a flat correction whereby we've done a zigzag down here, a triple zigzag. We'll do ABC back up, and then we get another leg down before we start going up. So I see euro doing those two possible scenario, is one doing a flat correction with the ABC up and another leg down, or it will simply start staircasing up along with the dollar doing the opposite on the other side. So and the fact that we're expecting euro CAD and euro New Zealand and euro Aussie all beginning to form, they all got one more leg down to come, and they're all going to be looking to form a leg up. So I suspect that we may well have an area here which is going to be current bottom already in, or will be most likely an area where the bottom will be formed, and then the euro will start going up again in the next leg. But on the basis of what we discussed regarding the dollar doing two possible things, so the euro will probably have the same. The one possible is ABC up and then another leg down, or it will simply do minor 5 wave up, small retracement, and then another 5 wave up, and actually create a little dish kind of a shape here, just like what we had back in then. Okay, so euro looking to go higher overall, and then the pound is coming down into an area where, you know, we will still likely to get a bottom. See, on the daily we still, it's now getting very close, but we still have a potential divergence available on daily. Okay, and I think it's going to happen on the 4 hour. There's no doubt we have a divergence on 4 hour. If you look at the actual chart, then remember we were saying that when you have an extended wave 3, this is wave 1 here. So the wave 1 often is the size of a wave 5. So in this case we've gone a little bit beyond that. So we are very mature in this leg. If we drop down to 1 hour, and in that last leg down we've got this 1, 2, 3, 4 and 5, so that gives you one complete cycle down, retracement wave 2, and then I think from there to here is the wave 3, because it's like this, the way I'm reading it is got 1, 2, 3, 4 and 5. Okay, so ending with an ending diagonal. So 1, 2 and 3 up to here, ABC back up as a 4, and we are doing the very last leg down now, right? And in that last leg on 15 minutes we've got 1, 2, 3, 4 and 5, so that's like one wave down. Okay, then we've got possibly let me just revise that. When I say one leg down, possibly say if this was 1, this was 2, then maybe all of this is a part of the same leg, 1, 2, 3, 4 and 5, so that could be another 1, another 2, this is 3, 4 and 5. Okay, so that means 1, 2, 3, 4 and 5 is done. So starting from here, 1, 2, 3, currently 4 and 5. So we're really running out of time and the wave count. This here is possibly 4, so we might still go up a little bit, and then finally a leg down which will complete 1, 2, 3, 4 and 5, and that really is it. You can't go any more than that. Any more than that, I will have to seriously start considering whether I've got it right or wrong. I am not prepared to give that up. I think there is overwhelming reasons which you are familiar with now, in terms of more and more people are now getting bearish about the pound, after pound has fallen for how many days, almost from the beginning of the year, from January, right? It's been falling from here and it's fallen all the way to there. So in number of days we're talking now is nearly a month, over a month and a half it's been falling. In terms of weeks, it's almost like a 6 weeks it's been falling. So now they become so bearish on it, and the large speculators, i.e. hedge funds and other people, they've become net short, or they increased their short position the last week when you looked at it, which was Tuesday, and then the position will have changed. They will have gone even more shorter this week, and now there's a talk about possibly UK to be downgraded by the S&P on their credit rating. So all of these kind of things are driving the sentiments very, very seriously to a bearish position, and we've got divergence on the momentum, and also as it's dropping there is less and less volume. Let's see if I can show you one, and then I will bring the thing to conclusion. See, pound, not the pound, I want to use pound options, not option, I mean the futures contract. So what I wanted was the futures contract. Pound, come on. Where's it gone? Pound futures contract. Okay, so this is the futures contract where we get the volume. Okay, you can see on here now. So if you look at the volume, this daily chart, if you look at the volume, see this volume is quite high. That was the day before, but the range of the bar is small. High volume, range of the bar is very small. Then we've got today, for example, is a relatively small range of bar, and the volume is lower. This one here, which is when apparently the governor of Bank of England said about more quantitative easing possible. There was a wide range bar and the volume was not as great, and then the next day it gapped down. The volume was big but the range of the bar is small. That means there's a lot of volume but the range is small. That means a lot of the volume being absorbed by some professional money. So professional money has been busy buying pound here. Make no mistake about that. You know, otherwise you cannot have this massive volume and very small bar. If there is a lot of pressure and people are really selling and there's nobody willing to buy, then you'll see a big bar like this, because it starts off at the top and there's no more people who are looking to bid on you, so your prices drop, so you get a big bearish bar to the downside. Okay, so when you look at this one, so you had a big bar here and the indecision bar in between, another big bar, and then the bars have become smaller and the volume is also dropping off, right? Most highest volume was that one there on a big bar. Sorry, one after the big bar, which was a gap down, and then subsequently the volumes have become smaller and the bars have become smaller. You see, look, see these bars here are smaller compared with this big massive bar, this big massive bar, this one massive bar. These are normal range bar. Now today's bar was larger than yesterday, okay, but the volume is actually less. Yesterday's one was, I think, not really, you can't really call yesterday's one reasonable because, you know, like US was closed and all that. But the Friday, this green bar was a pause bar, so the volume was small. But Thursday was a big volume but a small range bar. So in comparison, what I'm finding now is that as the bars drop, we should see volume drop off, and that means there is most of the forced sellers are almost out, right? And then we will start making move to the upside. So anybody who is long at the moment and are being panicked out, they are currently looking to bail out. So those people will be out, and once they are clear, then this price will start going up, and then many who are short will be short squeezed. So we should get a movement strong to the upside. And remember what we said about a flat correction, expanded flat or flat correction with a 3 wave and 5 wave. Well, here we have ABC wave A going up, then we are retracing that. So in a retracement we got ABC down as a wave A, ABC back up as a wave B, and then 5 wave to the downside. 5 wave, wave 1, wave 2, wave 3, wave 4 and wave 5. And as we're saying, we are in the very final stage of that wave 5 completing. So what will probably happen is that we might finish up those 5 waves completing, and today is Tuesday. Sometime this week I think they'll probably finish. I think even now, if we find that pound just gradually keeps creeping down, probably 154 is a reasonable area, because if you do Fibonacci of the whole leg, 88% retracement comes to 154. So that could be one possibility, but as long as it holds above this low in June last year, we are still looking for my count to hold. If we breach that, then I'll have to revise my count. Okay, then something else is in place, and we've not been able to get ourselves, you know, around it. And I don't know what it could be, because you see the only other way is that this was a strong wave down, so we've retraced that, and we've retraced that in a strong wave down. We retraced ABC, but we've retraced more. Well, on the futures contract we haven't, but I think on the other one we've probably penetrated that. So this was a very strong wave down, this ABC back up, I don't know. And then if that was the case, then this will be a completely new leg to the downside with the 5 waves. And then what we should still get is ABC retracement, which will come back to this kind of level, and then we'll get another 5 wave down, in which case pound is in serious trouble, and we would no doubt revisit the 2009 low. If this is the brand new leg to the downside, but we'll know by the time it gets, you know, if it holds up to here, then we're expecting my count to hold, and if we go beyond that, then my counts are wrong, and I have to admit that we've got 5 waves move to the downside as a brand new downward leg, and once it's, and even that is very mature, so we should still get a bounce in this area, and we'll get ABC retracement back up. Even if we don't get a reversal of the trend to the upside, we'll get ABC back up, come somewhere in the region of about 158. That will be like a 50% retracement, and then we'll see the next leg to the downside develop. So we will get plenty of time to understand exactly what's happening. If it's not what we are thinking of now, if it's something else, we'll get evidence of that, and we're still looking to get long. Even if this one just bounces to halfway, there is still a good possibility for making reasonable money even on just that going back to 158. But more importantly, we are not looking to trade pound against dollar. We are looking to trade pound against euro, pound against New Zealand, or pound against Aussie. That's what we are looking to trade, and both of them, to me, I think are going to line up with the pound bouncing in this area. Okay, so that is enough from me. That's all. I don't know if there's any questions, any comments, or do you want me to go over anything that I might not have been very clear about? If so, then I'll do that now. Otherwise, I'll look forward to you sending me any comments or questions in a Skype or an email, and I will try and address that question or any aspect. Other than that, I will send out this recording as I do normally, fairly shortly, as soon as it's uploaded. So I'll stop the recording here.